Hey folks, my guest today is Rebecca Clyde. She's the CEO of BotCo.ai, a startup offering intelligent chat nurturing solutions for health and wellness enterprises. With more than 20 years of experience in the technology industry, she's passionate about advancing women in tech. Prior to BotCo, she co-founded a digital marketing agency and managed marketing programs at Intel. Rebecca, are you ready to take us to the top?
Definitely. Hi, Nathan.
It's nice to meet you. Okay, tell us about BotCo. Who are you? So you're selling directly to health and wellness enterprises. Why that niche?
Well, because they had been severely underserved. I've been in the marketing automation space for quite some while, and I thought that a lot of the marketing technology that was built was really suited more for technology companies, software businesses. But when it came to the health and wellness space, they had some needs that just weren't being satisfied. Things like compliance around personal health information, the ability to integrate with maybe benefits and verification of benefit systems. So a lot of these providers use insurance as the form of payment. So they had some kind of unique elements to the way that their business is done that had not been addressed by the traditional marketing automation platforms. And so I found that there was an opportunity there to go in with a service, a product that could really satisfy that gap.
Love that. Okay, and so what are these customers paying on average per month to use the technology?
Anywhere from about $1,900 a month to upwards of $7,000 a month.
Oh, wow. So what would it fair average be? Like 2,500, 3,000, something like that?
Roughly around there. Mm-hmm.
Okay. So this is very much an enterprise motion then. Were you enterprise from day one?
Yes, always. Our very
Wow.
first customer was a billion-dollar company. Yes.
Can you name who that was?
Massage Envy. Yes. So
Who?
they're
Who?
a large Massage Envy.
Oh, yeah, of course.
Yeah. So Massage Envy is one of the largest wellness providers in the US. They provide clinics all over the country. They have over 1,000 clinics that have massage therapy, but also a lot of other services as part of their program. And they were one of our customers.
How do you land? I mean, they're people listening are going, wait, how did Rebecca land Massage Envy on day one? How does Massage Envy look at a startup company and say, we're willing to bet our HIPAA compliant chat on Rebecca?
Well, to be fair, I've been working in enterprise for a long time. So, I mentioned the agency that I had started previously. So I already had a lot of relationships in the enterprise space. I was very familiar with.
Oh, the agency worked with health and wellness folks.
Yeah, my previous agency, yes, had a lot of clients in this space. I do a lot of public speaking, and actually the way that I met them was through I was doing an event. I was speaking as a keynote at a conference and talking about the power of AI and being able to automate conversations to scale and engagement with consumers. And they came up and talked to me afterward. It was one of their marketing executives. And pretty soon I was in the C-suite with their entire executive team talking about how we could make this happen for their company.
So this was your agency, right?
Right, previously, yes. Mm-hmm.
Did you shut down the agency in favor of BotCo, the SaaS company?
No, I hired a management team and replaced myself with other people and turned over the reins to my business partners and then started this company.
Did you sell something there? Was there a cash event for you that you then plowed that money into BotCo?
No.
Okay. So you still have exposure, equity upside in the agency or a rev share or something like that over there.
Yeah, exactly. Mm-hmm.
I see. Okay. But now you're building BotCo. Okay. Now I understand. This is Massage Envy is your first customer. Now, how many customers are you working with today?
We have about 30 now.
30. Wow. Okay. Got it. And walk me through how you're getting those customers. Is it still all from relationships from the agency side, or are you running some other growth tactics?
No. That's just how you usually get your first couple of customers. Now we have a sales team and a marketing function. So, we hold webinars. Actually, we just had one earlier this week. We have a lot of webinars. We'll put on events. People will either sign up because they're interested in the topic. We provide them with really useful content, and usually
Rebecca, go deep with me on the webinar for a second. Very few people do webinars
okay.
well. Yeah. So let's go deep here. I know I'm going to ask some weird questions, but stick with me.
Sure, no problem.
How many people showed up live on the webinar?
About 25 or roughly.
25.
We'll usually have maybe about 100 that will register for the event. Usually a quarter will show up to the live event, and then another quarter will watch it on demand. But what's really interesting is the people that show up are super engaged, right? They really want to learn about this topic. They are spending, a good hour of their day doing this. So nobody spends that type of time unless they're really, really trying to make a big decision. And so when we follow up with them and try to, set up a meeting, they're usually very keen.
So you don't try and close them live. You don't say, go to this checkout page and pay today. What's the call to action? The last 3 slides of the webinar.
Yeah, usually we'll usually have some kind of program where they can meet with us to put together a demo that's uniquely suited for their company. And so that's the call to action is like,
I
hey,
see.
why don't you set up a meeting with us? We'd love to put a demo together for you to actually show you how this would work for your business. And then from there, we close them after that.
Okay, 100 register, 25 show up, another 25 watch on demand. So 50% end up engaging with the webinar somehow. Then some portion of those like book a demo. Go back top of funnel. How do you get the 100 registered?
Oh, yeah, a lot of different ways. So tons of social media efforts. So we share it out with our individual networks, which are all organic. We don't really pay much for social media promotion. We do like a tiny bit, maybe a couple $100, but we don't spend thousands on promoting it. We just find that the attendees come from either our shares or our shares of shares, right? So we'll have people who we know like share it out for us. We also have a really good solid subscriber list, people who have engaged with our content before.
How many, Rebecca?
Our webinars, I would say we have upward of like maybe 60,000 people in our database already.
And you've been building that since 2017.
Who said, yes, yeah, please tell us more about your products and services. So they're all opted in because that's a must these days.
Yep.
And so we, of course, let them all know. And oftentimes that we'll see that they forward it to their teams or to colleagues. We also get on a lot of podcasts like this and talk about the fact that we might be holding a webinar or have something coming up. And so we get new participation that way. I'm very involved in the community. So I do a lot of stuff in the healthcare and technology industry. So I tend to kind of be at a lot of events and I just tell people what's going on. And that's how they also hear about it. So there's a little bit of organic, social media, and then of course, just reaching out to our database and letting them know that these events are happening.
And now, Rebecca, can I do the math here? 30 customers at an average of 30,000 a year would mean you're about a $75,000 a month right now on revenue. Is that about right?
Probably, yeah, that would be about right. Yes.
Okay.
When we have a few of those customers that are grandfathered into our earlier pricing, so they're not paying as much. But the rest, yes.
So maybe closer to like 65, 70,000 a month in revenue. Can you do, so you have, what do we have? We have 60 more days left in the year. It'd be very cool if you were to break $1 million run rate by the end of December. Do you think you guys can do it?
Oh, I don't think so. No, we're projecting that for next quarter.
I see.
December is just is notoriously a slow sales month. And so we really only have this month left to sell, and it's a short month because of Thanksgiving.
Yep. And help me understand growth. So if you're doing about $60,000 a month today in revenue, where were you exactly a year ago? Do you remember?
Yeah, we were in ARR terms, we were at about 150 roughly. So we've more than tripled our business, almost quadrupled our business.
Yeah. I mean, so you've gone from like 12 grand a month or 150K in ARR up to 60 grand a month today. That's incredible growth. Now, have you done all this bootstrapped or did you raise?
No, we raised money. So we started the company bootstrapped. Then our first customer actually helped pay for the product in advance, which was very nice.
How much did Massage Envy pay up front?
I don't think they would want me to share that, but nice try though. So they were our first customer, and then they were willing to pay up front before we even had anything to deliver to them, which was really great. So I kind of see them as a little bit of they took a chance on us, right? And then we raised money from angels. So just, probably raised about $1 million from angels. And I got some grant money from the state of Arizona. So Arizona has a really great startup ecosystem, and they actually give out grants to outstanding startups. So we got
how much from them?
$150,000.
Wow.
From the state of Arizona, which was great. And then we got another $25,000 grant on top of that from another startup oriented group here. So that was actually very helpful at the beginning when you don't have a lot of capital to work with.
What year did you raise that $1 million from angels?
It was late 2019 was when we started. We raised just a couple $100K in 2019. And then 2020 was when we raised the goal.
I see. So all in, you raised $1 million.
No, after the angel funding, we raised for institutional VCs, and we raised another $2.5 million from institutional VCs.
I see. And I believe based off my notes that 2.5 it closed in February of this year. Is that right?
Right. So we had a chunk of it closed in February, and then we had a couple of investments that came in after. But yes, it was at the beginning of this year.
Tell me more about why you felt you needed to do that. Obviously, ownership is really important. You took dilution when you did that. Why did you need to raise capital to build this?
I mean, technology is tough to build, especially what we're trying to do. It's not an application you can build with, a no-code platform, right? So we have a significant engineering team, about 10 engineers that work on our product. And, what they're doing is coming up with technologies that handle, for example, fast knowledge acquisition, so we can train AI virtual agents faster. Okay. We have to be able to understand concepts like, what do people mean when they're looking for benefits coverage? We have to connect to other systems of record, which we have to have an API development effort that's going on where we're connecting to marketing platforms, CRM platforms, and EHR platforms. So there's a lot of integration that has to be done in order for our product to be really useful to our customers. So we need engineers that are building those APIs constantly. So yeah, it's a big effort from an engineering standpoint. And then, you have to hire people to sell, and you have to hire people to market, and you have to do all of those things. So not something that I could have done by myself by any means.
Yep. Well, if you're going to have to raise money to invest in technology, the second best thing you can do is you as a speaker, I bet, were able to tell a really good story with your deck to try and get a valuation that minimized the dilution you took when you raised $2.5 million. What valuation did you end up raising the $2.5 million at?
So that money, the 2.2 million, we raised it I want to say close to, by the time it was all said and done, we were raising our valuation kind of uptick to about 15 million.
1.5.
Already taken, yeah, but we had already taken a little bit more. So that was in the $3 million range where we got to the 15 million. So we did this step up strategy. It was actually a really great approach. I recommend everybody read. There's one of my investors is Ash Rest. He has a company called a firm called Sterling Road. And he has this really great strategy for how to step up your valuation little by little. So rather than taking all the money at one price, he's basically creates this system where you create, scarcity around different price points. So you say, okay, I'm going to raise 250K at this price. And then you quickly close that round. And then you raise another 500 at a, maybe slightly stepped up valuation. And then you close that. And so what this allows you to do is to more quickly move these people along into making a decision, investors, because especially in early stage, they're a little bit I want to wait, they're always trying to kick the can down the road. They want to participate, but they don't want to get pay too much. And so they're trying to kind of delay and obfuscate a little bit. And so this strategy really gets investors to move quickly because
what paper did you use on this? Was it basically a safe and you just kept increasing the valuation cap?
So I've done a combination. So I did at the beginning convertible notes. Then we actually converted all those notes into securities. So we issued stock. And then we had some investors come in after that wanted to invest after the securities had been issued. And for them, we issued a safe note, also using this step-up strategy. So we would just raise a small amount at a valuation, close it out. And then if the next set of investors wanted to come in, they had to step up the
I see. Yeah, this is called typically sort of like a rolling close, and it is a very effective strategy. So just to repeat that back to you, Rebecca, you took the first money in sort of this thing at a 3 million valuation. Over time, as you stepped it up, you ended up raising a total of, call it 2.2 million. And the last tranche that came in was at a 15 million valuation post money.
A little, yeah. So you have the numbers a little bit off, but at the end, we ended up with 3.6 million all in raised to date.
I see.
3.6 million at that $15 million.
Oh, I see. So when you say you did like a seed of the 1.4 or 5 in 2020, and then the 2.2 in 2021, it's all together. Yeah. It's a rolling thing.
So we went from 6 to 15 in that kind of 6-month period where we were using this stepping up.
I see. Okay, that's helpful. That's what I was trying to get to.
Yeah. So,
very cool.
And it wasn't 6, it was 6.8, 7, basically. 7 to 15 in that 6-month range. So it's hard to tell. That's why it's hard to say what did you raise it? Because it was who are you? No,
it rolls. Yeah, it rolls. It's always increasing.
We're constantly moving it up.
You mentioned 10 engineers on your team. What's the total team size today?
We're 25.
25. Wow. Okay. And talk to me about churn. It's critical in a company like this. Do you have dollar expansion yet? Considering how big your clients are?
Yeah. So our customers that have renewed this year have all either renewed at 100% or higher. So we have some customers that renewed at 200%. So they actually doubled their subscriptions with us. Some of our biggest customers, that's what they did. And so I would say right now our expansion, our renewal rate, if you average it all out, is 130%.
130% net dollar retention. That's a good place to be. And then talk to me real quick, sales reps. How many quota carrying sales reps do you have?
2.
And do you set them, the standard here is usually set them at $1 million quota, base is 100K. If they hit quota, they get another 100K. So it's 200K on target earnings if they hit the quota for a 5-to-1 ratio there. Is that sort of the playbook you're running there?
Roughly, yeah.
Yeah.
Although we use an uncapped plan, so they don't necessarily have to. We set an accelerator in place if they once they meet their quota.
Oh, interesting. So if they break $1 million quota or whatever the quota is, then they can start making more in terms of bigger percentages of commission. Very cool. And you have to come back on in a year and tell us how that's going. That's an interesting setup. All right, Rebecca, it's time to wrap up. What a story here. Number one, what's your favorite business book?
Oh, gosh, there's so many, but right now, Pitch Anything, I would say, because I'm always pitching.
That is a good book. Number two, is there a CEO you're following or studying?
That's interesting. I look and study a lot of different CEOs, but I would say probably one that I admire is one that's actually on my cap table that I have really worked with closely. His name is Greg Scoresby, and he's the CEO of Campus Logic.
Of Campus what?
Campus Logic.
Campus Logic. Very cool. Number three, what's your favorite online tool for building BotCo?
My favorite online tool for building BotCo?
Yep. There's a tool you use a lot.
Oh, in our company that we
yes.
live and die by. I mean, it has to be Slack probably. Just because
all right. Number four, how many hours of sleep do you get every night?
5 to 6.
6. Okay. And situation, married, single, kiddos?
Kiddos, yes, 3 of them. Formerly married, no longer.
3 kids. Wow. Okay. Amazing. And Rebecca, do you mind me asking how old you are? You don't have to answer.
Of course.
You don't have to answer. I only ask because it helps give listeners context, right? So let's take us the question.
It's okay. It's okay. I'm happy to tell. I'm in my 40s. So
okay, fair enough. She's 40 years old. You guys heard it here first. All right, Rebecca, take us back to your 20-year-old self. What's something you wish that she knew?
I wish that I had, I would say, believed in myself more earlier on, right? I was very much a learner during that time of my life. And so I put a lot of weight on what other people would say instead of really trying to rely on my own experience and my own intuition.
Guys, botco.ai, it's HIPAA compliant chat for, companies like Massage Envy, right? This sort of space, health and wellness. They broke $12,000 a month in revenue exactly a year ago. They've 4x'd year over year, now doing over $60,000 a month as they look to break $1 million, hopefully next year. She's done this in a very capital efficient way with rolling closes, 3.6 million raised with the most recent valuation at around 15 million, using this to fund her team's growth and product development. 25 on the team, 10 engineers, 2 sales reps as Rebecca continues to grow. Rebecca, thanks for taking us to the top.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.